Hello, I'm Hickey from interest.co.nz and welcome to a special economic weather report brought to you from here at the Reserve Bank of New Zealand and brought to you in association with Bank of New Zealand. Today the Reserve Bank has held the official cash rate at 2.5%. Now this was widely expected. The thing that surprises is that the Reserve Bank has lowered its expectations for interest rates over the next couple of years. Now it still sees an increase in the official cash rate at some stage to control some inflationary pressures, and it's now expected to be towards the end of this year, maybe early next year. But the key thing is the Reserve Bank is saying the 90-day bill rate, which it does forecast, is now likely to increase only about 150 basis points, so about 1.5%. Now remember, mortgage rates are based, for those people on floating rates, based on those 90-day bill rates, and they in turn are based on the official cash rate. And previously the Reserve Bank was saying these would rise about 2%, 200 basis points. Now they're saying that it'll rise about 140 basis points. That means if you've got a floating mortgage rate, currently around about 5.75, it's likely to rise to around about 7.1. Previously, people were talking about an increase towards 7.5, 7.6. So that has lowered the interest rate outlook for borrowers for the next couple of years. So lower for longer, which makes floating relatively more attractive than fixed. It also means an increase in term deposit rates. So there, although not as much as we'd previously expected. So term deposit rates, 6-month rates, around about 4.5%, rising again by that 1.5% or so instead of the 2%. So that's bad news, I suppose, for savers, good news for borrowers. So why has the Reserve Bank done this? Well, it says that the global economic turmoil has lowered the growth outlook for the rest of the world, and that eventually will come to lower our growth outlook and reduce some of the inflationary pressures. Secondly, the relatively high New Zealand dollar, this is even though we've got lower commodity prices, is controlling some of the imported inflation, so it's helping the Reserve Bank do some of its work. And also the Christchurch quake rebuild is taking a bit longer than many people expected, and the Reserve Bank has extended out its forecast for that surge in economic activity by about 3 months because of the slow work getting the rebuild going, the extended aftershocks, and problems with insurance, which the Reserve Bank is watching closely. So there we have it. Overall, the Reserve Bank has held the official cash rate as expected and lowered its interest rate outlook, and the New Zealand dollar has fallen slightly immediately after that. The expectation then is for lower interest rates than we would have expected for longer. I'm Hickey. That was a special economic weather report brought to you here from the Reserve Bank of New Zealand and brought to you in association with Bank of New Zealand.